Tradespoon and Yellow Tunnel. Today we're going to have a live trading room open to trade stock and options using our technology. Before we begin, let me know if you guys can hear me and see my screen. We'll begin shortly after. Desi, Phil, Fred, Lalit, Chat, Raymond, Patrick. Good morning. How's everybody doing? All right, then let's start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. And today we're going to have a live trading room open to trade stock and options using Tradespoon and Yellow Tunnel technologies. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. This is my brief bio. I was Executive Vice President, Head of Technology at Options Express from its inception through 2007. Options Express was an online broker-dealer acquired by Charles Schwab. At some point, the company was worth over $2 billion. Very proud of that experience. Disclosures: trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal past performance, and you can see the relationship between Tradespoon and trading block on the bottom of your screen. All right. Very important to go over the trading rules. It's important to have a pre-market routine. I propose to have 30% of your portfolio in cash if VIX is below 20. It hasn't been below 20 this year, even though it's approaching close. It was the recent rally. If the VIX stays above 20, where market uncertainty is elevated, I would consider 50% of your portfolio in cash. In terms of cash, again, if you sell in credit put spreads, or even if you're buying calls, I would still encourage you to translate your holdings into equity amount, right? Because with options, you can have 4 positions. Only 10% of your cash is being used. But in terms of risk, and if you get a sign on these credit put spreads, or even on your loan calls, if you have sudden move to the downside, you might realize that you have less than 50 or 30% of your portfolio in cash, even though originally you only had 10% of your portfolio in cash. Probably one of the most common mistakes that I see, right? You buy one contract of JP Morgan and you buy one contract of Ford, right? But you have to realize that one contract of Ford and one contract of JP Morgan trades at over 100, Ford trades under 20. It's 5 to 1. So you own 5 times more JP Morgan than you do Ford. So very important. And if you do credit put spread or you sell in premium, call spreads or put spreads, if that's one of your strategies, then again, you own 5 times more JP Morgan than you do Ford. So I encourage you to translate option contracts into equity and always pay attention to cash. Second is portfolio drawdown. Portfolio drawdown to me means number of positions times exposure per position. 2.5% of account value per position times 4 positions 10%. Why common question, why 2.5%? I always do 5% of stock value. Again, for the reason is that Tesla moves much, has higher beta, right? It has higher beta than Procter & Gamble, right? So you can do 5% stop loss on Tesla and 5% stop loss on Procter & Gamble, because Procter & Gamble might take 3 months to drop 5% or go up 5%. But Tesla, it's intraday moves, could be 5%. So for that reason, you have to adjust for the underlying beta. So one way to do it is always think about account value. So right now, I still think we're trading in the bear market. I haven't changed my opinion. If you follow my trades, I think this is a pretty strong rally, one of the strongest rallies this year. But nonetheless, it's still nothing has fundamentally changed. Yes, earnings are better than expected, which is great. That's positive, but still the headwinds in terms of inflation, in terms of hawkish Fed, and signs of slowing economy. If you look at manufacturing activity, if you look at the housing activity or service activity, it's all the trends are lower and lower highs. So at least as of right now, there's no reason to think that we are resuming the bull market. So by definition, that means we are posting lower highs, lower lows. Is this the end of the rally? Probably nobody knows. But is this the signs of top building process? Yes. I think we can trade in the range for the next couple of weeks. We have unemployment numbers on Friday. We have CPI data next week, and that will spark volatility. I think there is limited room to the upside. We can get to 420 level, right? That's the previous failed rally, is 416, 417. I mean, best case scenario, we can get to 430, the previous rally. But still, maybe, either 8 points to the upside or 20 points to the upside. So if you are getting bullish on these pullbacks, let's say yesterday at 406, you buy because you think we can get to 416 and you're doing short-term trading. Fine. You can. This is your resistance number 1. This is your resistance number 2. Let's say you think we are resuming the bull market, or you think that we can at least get to R1 if you're short-term trader and you're trying to get 7-8 points on S&P. Your stop level, if you're day trading, yes, today market is up, right, 410. So if you're day trading, probably your previous low is your now intraday stop loss, right? So that 406, 407 level. Yesterday's low, right? That's important support 1 if you're doing day trading. If you hold in position longer, right, than previous, you could see this wave, right? Then it's 400. So that's support number 2, right? If you hold in position for a couple of days, I would encourage you to consider 400. And if you hold in for a couple of weeks, then the start of this recent leg up, support 3. Right? Most people don't do day trading. I think majority of the people doing kind of weekly trader or couple days, couple weeks. Let's say 390, right? You say, well, we visited 390 last week. There's no reason. On this week probably not. If you hold in position into the next week, if you hold in position to the next week until next Friday, I would encourage you to consider 390 as your stop loss when you're allocating the size. So you're buying at 410. You put in a stop loss at 390, that's 20 points, right? 20 points. 2.5% of $10,000 account, average account is $10,000. 20 points. If you're doing day trading, it should be less than 1%. You need to have $25,000 with less than 1%. It's $250. That's the magic number. Obviously, if you have $5,000 account, that should be $125. If you have $20,000 account, it should be $500. But there's a certain number that should always stay the same, right? That's something you document in your journal. You write it down. You put it in the FedEx envelope, and this rule you don't change. Position size you should not change, right? You can change how frequently you're trading. You can change the time of the day you're trading, but how much you're risking, that should not change. right? Just because you feel good today and you're full of energy, that doesn't mean you should risk, 5% of your portfolio as opposed to 2.5%. So that's the rule, and a rule that you don't want to break. So $250, 20 points in risk. I propose to 12 shares, right? So 20 points times 12 shares is $240. Since there's, if you think that we are trading in the bear market, this is a rally in the bear market, I encourage you to maybe split this trade into a half, right? Buy 6 shares in case we do pull back. Market probably will trade in sideways for the next couple of weeks. So then you buy 6 shares now, and then if it does drop to 408, you can buy 6 if you're day trading, or if you holding positions till next Friday, maybe around 400, you can buy those other 6 shares. But that's your calculation. And right now, I propose to be either market neutral or slightly bearish on the market. So you have 2 bullish position and 2 bearish positions with same types of calculations. Right? This way, if you have 4 positions, let's say all of them go against you, because market is volatile, the maximum exposure is 4 times $250 is $1,000. You don't want to, I propose not to risk more than $1,000 on your portfolio. I don't know if you have any questions. All right, Steve Holman. Let me know if you have any questions on live stream on Discord. Okay. Discord guys, let me know if you have any questions. Go to webinar. Ted, excellent. Fred, fishing trip was great. We went kind of this deep sea fishing in Lake Michigan, Michigan side of Lake Michigan. And it was a lot of fun. We didn't catch any fish, unfortunately. Not sure why, but it was a quality time with my 6-year-old who's turning 7. They had like 10 rods, and we were doing trawling. So that was a lot of fun. I've never done anything like that. Usually just kind of a manual, you do everything yourself. Here you just kind of sit and watch. But it was new experience to me. I never fished in Lake Michigan. So that was the first time. Apparently this is how you fish in Lake Michigan, because the fish is like 200 feet down. So you have to get much lower. All right. Let's see. All right, let's go over some of the positions. All right, any other questions? Faust, good morning. John, good morning. Grateful. Thank you, John. Yeah, speaking of John, thank you for donations. I was born in Ukraine, Kiev, have family there. I joined the board of directors. This gate.org. All the donations get sent to Ukrainian family directly. By pressing donate, you can pick a family that kind of doesn't have enough money to for food, because especially with all the inflation and the war, or you can just donate and the money will go randomly to different families, and you can see all the families that need the money. And this is children, right? We only donate families that have at least 2 children. and also YouTube. We are on YouTube again. Community. Speaking of community, you can participate live on Discord Monday and Wednesday, or you can participate on YouTube Wednesday, morning bell and the closing bell. So if you want to be part of the closing bell, hit the subscribe button. If you like the video, please share it with your friends on any of the forums. If you're on Discord server, if you are on Wall Street Maven, blog forum, or if you're part of the Facebook groups or anywhere else where you're part of the traders, then join that link. Yes, so I'm new. Please be more specific here. All right, let's see. Reply. Do you have a specific question? Maybe able to guide. Okay. So yes, please join live. I'll say here, join our website by clicking the link to see the recordings of live trading for guidance. Give me 1 second. We'll start going over the. All right. So thank you, John, Desi. Thank you, Desi. Yeah, then volatility does impact how much the stock will move. Victor, if you do risking 4 times to $50,000, what do you do with the rest of the account? Again, let's say you have 1 position spiders. 1 contract of spiders is $41,000, right? So $41,000, you can buy 1 contract of spiders, and all of you, the entire $10,000, $9,000 is being used for, right? If you sell, let's say, a put, 406 put spread, you own $40,000 of spiders. So even though your account balance will say $9,000 in cash, right? But you own, even if you buy a call of spiders, it's $41,000. So you're already leveraged. So if you're trading options, just remember your account will say $9,000 free in cash, but in reality, you are using all of that cash. You're just leveraging it, right? And even if you trade in, British Petroleum, right, it's $3,000, right? If you sell 1 contract of British Petroleum, you own $3,000. So something to keep in mind. Fred, deep fishing in Fort Lauderdale. Oh, Siesta Keys. I heard Siesta Keys has a good deep fishing. Thank you, Fred. Thank you, Victor. All right. All right, Discord guys, let me know if you guys have any questions. All right, let's see what's next. All right, let's review the positions. So AMD, right? We were talking about AMD. Let's try to close that position. We don't want to take the risk. AMD is down after the earnings, 3%. I did. Again, iron condor. In this environment, when you have, volatility is lower, so you have to be careful. In relative terms, volatility is near 20, where it's been in the range 20 to 40. So you have to be careful with the selling premium at this point. You're probably better off just buying calls or puts based on your opinion in the market. But nonetheless, because of the earnings announcement, volatility is higher. So I was able to sell 30 cents, the spread, iron condor, 120.86 put, 30 cents plus 18 cents is 48. 48 on a $96 stock is 0.5%. By doing 2 times estimated move. 2 times estimated move. So let's try to close this trade. First of all, Apple, why is Apple didn't get filled? Apple 38. Okay, so we can close the Apple trade. That's close enough, 40 cents. We'll go over the Apple trade and then we'll go over the AMD. AMD, all right, so call is worthless. Let's close the call. Again, question is, why do you close it if it's still out of the money, right? AMD is trading at 96 level. It's down. I have 86 put. So it has to sell off another, over 10%. One is because of the margin requirements, very large margin requirements. I sold 86 put, bought 72 put, it's $1,400. So the $1,400 is at risk. Your broker dealer holds $1,400 of your account. Going back to your question, what do you do with the other $9,000 on the $10,000 portfolio? Well, $1,400 of that account is being held as a requirements, right? Option requirements to support this trade. So I want to free this buying power up. That would be another explanation. Plus, we have unemployment numbers on Friday. It could be it could be again one of the good news is the bad news, and market sells off. And then I sold 86 put. It's still Friday, so I can maybe try to close it for 4 cents. Well, there is a good to cancel. Okay, so I closed the 120 call. So I closed 120 call, right? And then I'm trying to close 86 put for 4 cents. It's trading around 8 cents right now. So 4 more cents, let the dust settle. It's still 10% of the money. So selling premium, right? Especially on the spikes in volatility. When yesterday, if you're a short-term trader and you can see the support is now. Let's see, spiders. Is at 408, right? This is 2 times we reached 406.84, right? So that's kind of the line in the sand for day traders, right? If the market drops below 106.84, you probably want to close your long positions if you're day trading, right? So, but if it does drop like yesterday to 407, then maybe selling credit put spread, right? You could sell, I don't know, depends on your trading plan. You can look for 0.5% gain, 1% gain, but something along those lines for day trading. And vice versa, if it reaches 413, you can sell call spreads, right? Out of the money call spread. But selling premium using spreads, you can do either single spread, depending on your view. If you think, AMD is not going anywhere, it's not going to drop 10%, it's not going to rally 10%, then you sell both. If you think AMD will rally more than 10%, then you just don't sell call spread. So you can express your opinion in terms of market reaction. And same thing with Apple, right? Same thing with Apple. I kind of said that my portfolio is bearish right now, so I'm doing these short-term trades, selling puts spreads on Apple. I did it for the earnings, I did it for the earnings, and now I did it again this week because, I think 157.5 level will hold. So I did close Apple for 40 cents. 157.5. Again, question could be, why don't you wait for expiration? Again, one contract is $15,000. So even if I see $9,000 in my portfolios in cash, I own $15,000 worth of Apple, which if market reverses and Apple drops by 4% or 2.5% or even 1.5%, right? If it drops to 155, well, that's your $250, which could happen very quickly after the unemployment numbers. So for that reason, I want to free up my buying power, and I was able to capture 50 cents, 30 basis points, then, I'm moving on, right? It's all about compounding investment, right? I believe in compounding investment at 0.5%. One second. Okay, 1 second. Senior. You can use. All right. Yes, thank you for participating. Skinner Holman, hopefully that answered your question. Let me know if you guys have any questions on Discord. Usually, Desi, I do agree, right? I do agree. If you believe that this is the bear market, right? If you believe in the bear market, this consolidation looks similar to the consolidation we had in June, consolidation we had in April, or consolidation we had, in March. So, you do have, 1 or 2 weeks of consolidation, and then the next move, usually it has been down. It's true, it has been down because of the CPI print. It could be the same thing next Wednesday after the CPI data. We, next leg down, which I think is going to, most likely scenario, right? There's different scenarios, right? Question was, if we do, so let's assume we trade sideways for a couple of weeks, right? Or going into the next Wednesday, right? Maybe a little bit higher, right? Maybe a little bit lower, right? Something along this line, right? Those are the consolidations we've had. Then we have CPI print, right? So I would say my core scenario is that sometime, next week, after the CPI data, that that's the beginning of the pullback. It doesn't have to do this. I think all the negative news are already factored in, so to speak. So I don't think it's going to happen like this, but lower highs, right? Right, lower highs, and then everybody goes back from vacation. You can see volume is down. A lot of people are not here. So let's see. So that's something to consider. All right. All right, PayPal is soaring. So that's AMD. Any questions on AMD trade? Again, similar to AMD trade, people do the same trade you can do on spiders, ETFs, or individual stocks. If you trade in Apple, Microsoft, the idea is very similar. Let me know if you have any questions. CVS had earnings, right? I didn't do it I showed it at the closing bell yesterday. These were the candidates for the same strategy. It's up 4.5%. And so, if you sold 88 put, it'll be the same strategy, 102 put. You can see CVS. Going through consolidation. All right, so we talked about AMD. Let's see, Occidental. Down 2%, going through consolidation. And Starbucks, strong rally, now pulling back. Let me know if you have any questions. PayPal is soaring. Thank you, Victor. On the earnings, up 12%. Okay. Any other questions? Let's see, Discord, guys. Lady Godiva is back. Welcome, Lady Godiva. All right. Go to webinar. All right. Great. Okay. Let's review the other positions. So we went over Apple, we went over AMD. Let's see. AMD is getting close to fill. Let's look at the rest of the positions. FCX. So this is longer term positions. I have September calls. I have September calls, 35 call, and then I have a put spread. So I'm short. So I'm bearish longer term. I think by November, by December, we will have this pullback. Short term, I think we could have another leg up. right? FCX has been volatile. It's pulling back, but it is potentially we can have another leg up. Since I'm overall bearish, I'm holding on to these calls. Potentially they can continue going higher. IWM, same idea. Long and short the market at the same time. I'm long the call spread. In December, 190, 200 call spread. I think actually by December, we'll have both down and up leg, right? Usually September, October is bearish going into the midterm elections. And then after midterm elections, like from the cycle, from centennial cycles and from the the long-term cycles, usually midterm elections, going into the midterm election, you have a leg down, especially in the bear market, and then another leg up going into December. So we could have both. So for that reason, I still have a put spread. September, I'm a little, not a lot of time left, right? 2 months. So we may or may not have a down leg for September, but we do have 190 to 200 call spread in December. So again, same kind of strategy. QQQ will probably add bullish position too because I'm overly bearish. I have 280, 260 put spread. I have 240, 220, 240, 260, 240 put spread. And let's see what else. And I have 330, 350 call spread. So all of these are bearish positions. So probably add, bullish call spread on QQQ. If you're not comfortable trading options and hedging your positions, you can do that with SH, right? So SH. So buying SH inverse ETF, right? You have inverse ETF trades 1 times the shares. Bearish on banks. I am bearish on banks. This is where I would probably not be bullish and bearish because of the yield inversion. So I have 35-30 put spread expires in December. Short term, after Fed spoke yesterday, Fed chairman spoke. Not chairman, but pretty cool. Fed president, right? After Fed president spoke yesterday, again, the idea that inflation is here to stay, and Fed is not ready to pivot, right? Not ready to pivot to lowering interest rate or divert from their current intention. And 10-year yield jump, right? But nonetheless, it's below this head and shoulders. It's been broken, right? So we've confirmed the top, right? I would most likely we will not see a higher print than 3.5. And if I have to guess, again, best case scenario, it gets to this shoulder level, around 3.2 level. But again, I think it's going to be a pattern of lower highs and lower lows in yield. And also, as a result, dollar also pulled back and rallied. So now you have some headwinds in these names. Meanwhile, QQQ is up 1.5%, right? It approached 50% retracement. So we're at 50% retracement from this previous high in March high to June low. And it's also February low. So we've reached this first level of resistance. Let's see. ARK is up, Spiders is up 80 basis points, Russell 2000 is up. So we have rally across all the names, almost all the names. So materials are still underperforming, home builders are still underperforming. Emerging market, Germany is underperforming, China is underperforming, energy is flat. So again, the risk on value stocks are underperforming, right? Whether it's banks, right? Whether it's banks, insurance, or transportation, everything is underperforming. But consumer discretionary, biotech and technology, right? And ARC is outperforming today. So you have Apple up 2%, Amazon is up 2%. How's CVS doing? Let me know if you have any questions. Accidentally. And Uber continues higher after the earnings. All right, any questions on Discord or go to webinar? QQQ is part of the premium service, so I'm going to wait till Sunday. Right, we'll see. Right now, just because I don't want to get overly bearish, just to be long and short, I would add to QQQ put spreads in December, but probably I will wait for the weekend. Ideally, I want to buy it on a pullback, right? Like right now, I think chasing the market at these levels doesn't make sense, right? If you believe that we're not in soft landing and Fed will not orchestrate soft landing, that we will revisit these levels or marginally break these levels. So I still believe in that. By definition, I would rather buy and pullback. So maybe I'll buy QQQ call spread, but I'll put a limit order, so buy it at 310 level as opposed to 318. All right. Any other questions? It's 9:04. Desi, thank you. Nimas, are you using platform tools for trading analysis? I'm new. I'm not sure what the platform tools you're referring to. So we have different services, right? Both Tradespoon and Yellow Tunnel, right? So if you're on Yellow Tunnel, we have aggressive power, weekly power, dynamic power, earnings power, trade, and profit accelerator. So different services. If you're using stock trading, it's profit accelerator. If you're using earnings, it's earnings. And then if you're using both stock and options, we have day trading, that's aggressive power, weekly and dynamic. You can go to dashboard and kind of view different services, right, that we are offering and the advantages and disadvantages. I encourage you to watch the video. On Tradespoon, similar thing. You can go to dashboard and every service, all the resources are explained. The educational resources are explained, and then every portfolio is also, every service is explained here. So, William, ENPH. What about ENPH? Short-term, long-term? Phase energy, semiconductor. I mean, it looks strong, right? It looks much stronger than the rest of the semiconductors, right? Probably one of the strongest. So if you want to buy a semiconductor, that's probably the one you want to buy. I'm personally on semiconductors, I would sell into the strength. Same thing. Yes, it broke. We reached February high, February low. We can reach January low, right? It looks like we're heading to 250. So I think there is, again, 2 more weeks of higher highs. But again, personally, I would not chase these stocks. I would either buy them on a pullback or selling them short. Anonymous, thank you. Short term, I think, again, you can squeeze a few points, right? But you're taking a lot of risk, right? Right now, I mean, it's kind of double top. It reached the top. I mean, it had good earnings. I mean, I guess there could be individual exceptions. I don't trade ENPH. Maybe they have a good story that can outperform the market. I've seen stocks that can outperform the market. So, but you have to analyze their balance sheet. You have to analyze. You have to understand who their CEO is, and just do a lot of fundamental analysis. Technical analysis, I don't think, it's kind of trying to break through this level. I would be patient, right? I would be patient because I think something like this can happen sooner than later. Until it's confirmed, this pattern actually looks pretty bearish, right? But it's a strong stock, so I don't feel comfortable shorting it. I don't feel comfortable going long. You need more data. You need to see. It's either going to do this, where you have week 1 down and then week 2 follow through down after the CPI print or after the employment number, or it will continue going higher, right? But you have earnings. The question is, will the earnings carry this, or carry it higher? And price to earnings 195. So I don't know what exactly. What are they doing that's so great? Or is it not a semiconductor? Is this energy name? Microinverter system for the solar. Okay, solar panels. Okay. So okay, so it's not an energy, it's not. So it's a solar panel. I mean, this is one of those exceptions, right? Solar panel. Maybe they are going to change the world. They build in these, semiconductors for solar energy. They have additional subsidies. So maybe, but that's an individual story. Just in general, stock that's trading at 200 price to earnings. I mean, at least it has some positive earnings, so that's good. But 195, multiple, any bad news, right? Any bad news, and then the stock would just sell off, right? So it moves, 100% up, 100% down. I think, if I have to pick the direction, it's going down. All right. Carmen, good morning. How are you? Day trading, you can see when I do day trading, I look for 0.5% gain, right? And again, my thought process, on compounding investing is, if I can invest $100, $1,000, and 10% would be $100, 1%, well, $10,000, right? If you do invest $10,000, 10% would be 1,000, 1% would be $150, right? So 0.5% is $50 on a $10,000 account, right? So if you have, that's an average account in Yellow Tunnel at Tradespoon. So if you have $10,000, 0.5% is $50, right? 10% is $1,000, 1% is 100, half is $50. Which you might say, what's $50? I can't really build an art studio for $50. Okay, but then we're talking about day trading, right? So even if you do, I don't know, day trading by definition every day, but let's say you do 5 trades, right? You do 5 trades a week, 1 trade a day. You look for 0.5% gain, right? Let's say you have, I don't know, on average 75% accuracy. So maybe 3.5 are positive, right? Or we'll say 3.5 are successful, right? Let's do 6 trades. Let's do 6 trades, so it's easier. Let's say you do 1 trade a day, and sometimes you do, a little bit more. So 6 trades, right? 6 trades a week, right? Let's say you have 4 that are successful, and 2 that went against you, right? Let's say you keep them at 0.5%, stop loss, 0.5% gain. 4 times and a half, it will be 2%. 2 times, let's say, 0.5% would be 1%, right? Same risk versus reward, but you're looking for 75% accuracy. So in 1 week, you made 2%, you lost 1%. So in 1 week, you made 1% return. In 1 month, you made 4% return, and in 1 year, you made 48%, right? So I think, you're a superstar, right? If you can make 48%, it's great. So that's the power of compounding investing. And then all of a sudden, $10,000, you made $5,000. Obviously, we all want to invest $10,000 and make $5,000 tomorrow. But again, you have to look for home runs, right? You have to look for ENPH of the worlds, catch them at 120, ride them to 280 in a couple of weeks, or the reverse, you have to short them at 300 and catch them at 140 in a couple of days. These are random events, I think. It's very hard to find home runs, right? I like singles. If you're looking for home runs, there are, you can look at unusual options activity. You can, I don't know what else can you look for. You can try to follow, Wall Street mavens and try to jump on the train every time they kind of ride these trains. I found myself that usually you're at the end of the line, right? If you're trying to invest $10,000 and make $5,000, not in a year, but like in 1 week or in 2 weeks or in a month, whatever, usually you have to follow somebody, and usually, it's a herd effect, and you're at the end of the line, right? And you're, instead of, selling here, you're buying only to find out that the stock does this. Not that it's going to do this, but it's very hard to have, high probability trades and look for home runs. High probability trades, by definition, high ROI, right? If return on investment, right? If return on investment is very high, right? Then probability of success is very low, right? I mean, if you buy 1 put here, right, and you ride it to 140, well, it's great, right? You just, double your account. Great, I get it. But will you be able to do that consistently? The research shows that your probability of success is very low. Whether this level is overbought, yes. I mean, you don't. So the way we look, I looked at these forecast models, right? So we have 6 months forecast for spiders is at 411 with a negative trend. So news aside, interest rates aside, and Fed, CPI data aside next week, right? That can alter the situation. But assuming that all of the data is already factored in, better than expected earnings already factored into the price action, and CPI, the fact that inflation is reaching the peak and probably will start, CPI print will probably start going down, right? Assuming that's at least the expectations. If you take all this data into that market already factored in all this news, then the trend is still to the downside. The current trend is to the downside, and the model sees that 411 is the top, right? We're trading at 412, so we're already overbought. Does it mean that the market is going to stop at 411.99? Probably, may or may not, right? We've seen on the downside and an upside up to 5% overshooting. So with this new consolidation and earnings season and CPI and employment data, if everything is positive, we can get to 420 level, 430 level. It could happen. Right, it could happen, but the probability is low. It's very low that it gets to 430. It's maybe 30% chance it's going to get to 420. I think 415, 417 is where it's gonna, I think market is going to have hard time, breaking through this level. Right, you see this is the low in February, this is the low in March, this is the low middle of the March, this is the low end of April, this is the high end of May. This is a very strong overhead resistance, right? This 417 level. So probability that the market will break through this level, I think, right now is extremely low. Maybe marginally it can get higher. I don't know, 418, 420, but something has to change in dynamics, right? If Fed comes out and say, listen, we're going to pivot, CPI data looks better than expected, we're going to pivot. Well, yes, then you kind of put in fuel into the system, you put in entropy into the system, and the market continues rally. But the earnings season is winding down. I can imagine CPI data is going to be so much better than everybody expects. So then it's just the same grind, right? It's lower highs, lower lows. Haiju, any trade earnings? So again, I don't like to do it ahead of time. So you have to, for earnings, either earnings power trade. I encourage you to consider earnings power trade, especially if you like to do the earnings. This is only about earnings. Or elite circle, right? You can do elite circle, you see all the trades. Earnings power trade, you only see earnings trader. Elite, you see all the trades, right? So you have to decide which one you want to do and which one you don't. So let's see. I will probably do, again, I have to do more research. I haven't done, look for 2 times estimated move. But after the close today, don't see a lot of good stuff tomorrow before market. Alibaba. So Alibaba. You just need to confirm. I would look just to confirm if they announce earnings. It looks like they are. Before market opens, let's see what else. ConocoPhillips. Probably will do ConocoPhillips. I like ConocoPhillips. If it gives me enough premium, then ConocoPhillips. It may or may not. I'm not sure. I have to look. So ConocoPhillips, I like to do Alibaba. That's about it. I don't see a lot, anything better. Thank you, Haija. Thank you, Carmen. This is great. Naimos, thank you. Haija, thank you. All right, it's 9:18. Thank you very much. You guys have been a great audience. Thank you on Discord. We have a few people on Discord. Thank you. Scott will be later. Yes, John. DVN. And just announced earnings. It's trading lower. It looks like oil is reversing, right? I don't know if something happened, but oil is reversing. Oh, small. I mean, in the morning it was much stronger because the smallest increase in production. But yeah, it looks like oil is reversing. So again, I think it's the same thing, right? You can see it on the mainly dollar, right? Stronger dollar. Dollar kind of continues to rally. This is bearish, right? We know it's bearish for the market, and that's why the value stocks are already start pulling back, right? XLF, we'll see where we're going to close, but we have 2 days of lower highs. Let's see, how's transportation? Transportation is going higher. Let's see, industrials. Industrials, we have 2 days of lower lows, lower highs. So dollar, right? Dollar is bearish for the market, strong dollar. We had a pretty decent pullback back to the neckline. Now it's a headwind for this rally, right? Unless dollar continues to drop below 105, the rally is probably going to come to an end, sooner than later. So I would continue to watch dollar. That's bearish for the market. So energy, I would be a seller, right? I would be a seller. You can see it's going through this consolidation process. If it drops below 131, I would get out, right? I would get out of the energy trade, XOP. Or it can, again, or the best case scenario, it trades sideways, right? Trades sideways. So that's DVN. Thank you, trader. Scott later, yes. TYVM. Wow, you guys trade some exotic names. Love it. I don't even know what TYVM is. Not on my. I don't know what TYVM is. Is that a stock or is that talk to you tomorrow? All right. John, thank you. John from South Carolina. Love it. All right. That's all I have for today. Thank you very much, Discord guys. Thank you for participation. Thank you for questions. Mark, thank you. You were able to watch from Strategy Roundtable? Oh, that's pretty cool. Mark, thank you for joining. Mark, were you able to hear? Were you able to hear me and see the screen? Oh, yes. Okay, Mark. Discord guys, Yellow Tunnel guys, thank you for participating. Again, live trading every Monday and Wednesday, right? So Monday and Wednesday, no financial commitment. You don't have to pay for subscription. You just can ride along and be part of our community, right? Or YouTube, Monday and closing bell. If you want to see closing bell, if you want to see what the live trade will be today for that next earnings strategy, well, 155, you just click on subscribe button and watch it live. And if you like and you made money on AMD, please share that video with your part of the forum. If I lost money, please don't share it. That would not be good. But if I made money and you made money, then and you like you see the content valuable, then please share it on social media. William, thank you. Namas, thank you. Namas, please join us. Sign up for everything. Sign up for YouTube. Sign up for Discord, and keep learning. All indices big up next day. Bill, again, stock forecast toolbox still shows bullish trend. So from technical perspective, short term, the bulls are in control, and there is no doubt about that. The reason I'm cautious because I'm looking at the dollar. and they are highly correlated, but it's not, dollar could continue going higher and spiders can continue going higher. How long will this happen? Probably not for a very long time, right? Probably not for a very long time. Either the dollar has to reverse and drop to 103, or spiders have to reverse and drop to 400, right? They both cannot go higher, right? They can do this. Divergence can happen, for a day, two, for a week, but then it's over, right? So, and because model doesn't look at anything else but the price action, it sees the head of least, the path of least resistance is continue going higher. But I'm watching the dollar, I'm watching the CPI data, PPI data, the unemployment numbers. That's all risk. Model cannot predict what the outcome of CPI data, or it doesn't even look at the dollar when it makes predictions for spiders. That's why I think you have to have quantitative analysis and qualitative analysis. And the only way to get both qualitative and quantitative analysis, if you participate either live on YouTube or on Discord server, or you at least watch the recordings. Keep in mind, for all of these services, we do provide you with recordings, so you can watch them. Not just 14. The trial is 14 days is free. The Discord is Monday and Wednesday, right? If you want to participate every day live, you would have to sign up for Elite subscription. Elite subscription gives you access every single day. But if you just want to learn Monday and Wednesday, it will go beyond 14 days. Until further notice, right? For now, we intend on Discord every Monday and Wednesday, and on GoToWebinar. Bill, thank you. Linus, thank you. All right. Anyone else? Okay. Thank you very much, guys. Have a great day, and I will see you. When will I see you? Tomorrow morning. So Scott is doing closing bell, and then I'm going to do morning bell tomorrow. Thank you very much.